Bitcoin just returned to its 100-week mean, and the S&P 500 just returned to its 100-week mean at the end of May for the first time in about 2 years. Now, they were overdue. The question is, who comes out ahead? So right now, Bitcoin's hovering around 30,000. It's starting to break below that support. But what's also just broke key support, it's becoming resistant, is the NASDAQ's going down too. So they're all related. So right now, I fully expect Bitcoin to trade lower. I don't know how much lower, particularly because the tide's going out, the stock market's going out. But what I fully expect is when we see the foundation form, which is going to happen, it's just a question of when and where, Bitcoin and Ethereum should come out ahead. And that's not profound at all because they've been outperforming for so long. I think they have the much better supply-demand adoption case. And what I see happening is there's essentially I see institutional bids below in the cryptos, most notably Bitcoin, and offers above in the stock market. So Bitcoin's outperformed most equity indices. It's outperformed virtually, cryptos have outperformed virtually every other asset depending over what time period. But particularly Bitcoin, most notably the stock market, most notably NASDAQ. It's actually about the same price on a performance basis as it was since 2013 with Tesla, Bitcoin is, but they both represent rapidly advancing technology, really moving in on the incumbent. So this is a process I think going to expect to continue. The thing I've been focusing a little bit on this year is my attention's turned a little bit away from Bitcoin a little bit because what's happening in crude oil. That's, to me, the most significant macroeconomic development. Fed's tightening, crude oil's rising, it's making the Fed tighten more. But the thing to look forward to, and I'll get back to Bitcoin in a second, I'll explain why, is elasticity of supply-demand will pressure the price of crude oil. It always has, it always did, and probably always will. We're using less of it and replacing more. That's the big difference with Bitcoin. It's a very small part of most portfolios. It has no elasticity of supply. In fact, the elasticity, the supply by code is going down, and it's just becoming adopted as global digital collateral. So in the short term, I think we're seeing blips in the big picture trend, and that is Bitcoin, most cryptos, with the exception of some of the speculative ones, Ethereum, becoming part of global portfolios and moving into that space. But just like we saw with the internet bubble bursting in 2000, it doesn't come without bumps in the road. When you can measure performance on a 10x, 20x type performance, you got to expect the drawdowns. And this is what we're happening right now. That tide is taking out some of the high flyers the most.